Hey everybody, what's going on? It's James here with Crypto Common Sense. Wanted to shoot a Bitcoin/crypto update for you. It's November 9th, just before 3 a.m. Central Time. So before I jump into the content of this video, please do me a huge favor. Go ahead and hit the thumbs up button on this video, and don't forget to subscribe to the channel if you haven't already. So the first thing we're going to talk about today is the bigger time frames, and then we'll zoom in and take a look at the closer time frames on Bitcoin as well. Before you panic, before anybody jumps to conclusions, don't read too much into this chart. I'm going to go through this with you over the next couple of minutes. So essentially what you're looking at on the screen right now, this is a Bitcoin line chart. And if you don't know what a line chart is or how line charts work, essentially they take the closes for each candle and they just connect them with a line. A lot of professional traders like line charts because it removes the noise of the wicks and the tails, and it just gives you a really clean picture of what's going on in the market. So what is going on in the market? Well, if we're looking at this chart, guys, and I've been on Twitter today, I've been looking at social media already and trying to get a gauge for the sentiment. That's really the best thing about Twitter, is you can kind of gauge market sentiment. And the bulls are still very, very bullish. But some people, there's been some bearish, people turn a little bearish. So I think we're still going to be moving down, but I think we'll probably go up before we move down. But if we look at this chart, essentially what we have is we had this red triangle up here. This smaller triangle, it wasn't small, but it was smaller triangle compared to the great big triangle we're in. And we had this line of support that was sitting right around $9,400, $9,500, somewhere in that zone. Okay. And if we measure that triangle from the top to the bottom here, it was about $3,400 or so. And if we measure it from the breakout, that gives us a breakdown target of around $6,000. Now, this is what got people in trouble, was when they were trying to short this thing down to $6,000, and then it bounced like this. But I'm going to show you why it bounced in just a second. All right, so then we had this bounce and we came up, and essentially what we've done is we've made a bigger triangle. Now this is the bottom of our triangle here, and we still have this downward sloping line here. Until we break out of this triangle, guys, this is still bearish, okay? This pump, a lot of bulls are clinging to this, especially the big Twitter handles, with hundreds of thousands of followers who are the, I've realized the reason they're bullish is because you get more followers when you're bullish. So they're clinging to this pump. They just keep talking about this. This is one of the biggest pumps in Bitcoin history. What they're not paying attention to is all this was a bearish retest of support flipped resistance. This is a standard kickback, right? That's what it's called in the stock market. It's a kickback. It goes, breaks through support, comes back up and tests it. Now, normally you see it happen faster than this, and this is what got me in trouble as a trader. Is I kept saying it was going to go back up to 9,500, or I thought it was, and then when it kept going down, I finally just gave up on it and said, I guess it's not going to do it. I guess the momentum has just shifted so much that we're not going back up. So I was shorting down in this area, and that's how I lost all that money on this huge pump. Had I been patient and just followed my own, analysis and waited, I could have been shorting up here at the top of these candles, and I would have made a ton of money. But that's, it is what it is. But let me show you an example of a bearish retest. So right here we broke through this orange line, which is the 200-day moving average, okay? Immediately we put in a little W and we came up and retested it and failed. So bulls on this pump were getting excited, right, going long, whereas smart bears were actually shorting that pump because they understood this was a bearish retest. And all they had to do was put a stop loss a little above this line, and if they were wrong and it pumped through the line and closed above the line, they get stopped out, no big deal. But of course they weren't wrong, it dumped and a lot of bears made a lot of money. Then it had another retest of it, so same deal. Bears got to re-enter shorts all over again. This is when it pumped up to about $8,800 on a wick, right? Closed right here at the 200 MA, boom, pop open a short position, write it down, okay? So now what we've done is we've come down and we've come up and retested that. We had a false close above it, then below it, another false retest of it, right? Down, up, another failed retest, and down, okay? So far I'm still bearish, guys, but it could change. I'll show you what will change it in just a few minutes. But so far that's nothing but a bearish retest of support flipped resistance. It's a very cliche thing in markets, okay? It sucks bulls in and it gets them trapped. Now I'm going to pull up RSI. I'm going to show you this is, again, I've talked about this in past videos, so maybe you've heard me talk about this. Maybe you haven't, seen those specific videos. But anytime you see triple divergence on a daily chart, me personally, I'm looking for long positions. I would never under any circumstance, short a market that had a triple divergence on a daily chart, okay? Especially if it's coming out of oversold territory. And this is very easy to see on a line chart. So here's RSI making a higher low, a higher low. So here's our setup there. That's the first part of our setup. Here, I don't even need to draw this red line really. Here's a low, a lower low, and a lower low. So now there's our triple divergence, right? If you were in short positions at the bottom of this candle and you didn't close them, learn from this. Don't ever get too comfortable in a short position, okay? Especially if you see triple divergence. This was the reason that a few weeks ago before the pump, I said that I thought it was going to pump 10 to 20% was because of that divergence. Now it pumped harder and it pumped 40%, which caught me off guard. But the pump itself wasn't, unexpected at all. It was very, very TA based. I think what happened was the pump kicked off right at the same time that China announced the blockchain stuff, and people just FOMO'd in and sent it, skyrocketing. So anyway, so far nothing is bullish on this chart. We're in this, if you look at this channel, these yellow lines with the purple dotted line, that's our downward channel. That's our bear market channel. We need to break out of that to exit the bear market. We have the smaller red triangle with a target down around 6 grand. Now we have this larger red triangle. It's actually got a target down around 2 grand, depending on where it breaks out. And what's interesting about that is that actually lines up with the 4-year trend line, right? Now, me personally, I've been waiting for this thing to come down around 4,100 to 4,300 to fill in this gap and to come down and ping this green trend line, which is our trend line from the last, 18 months or so, basically, from this bear market bottom, okay? And it also lines up with some highs back here. But if this thing does come down and break out of this triangle and get real nasty, we could be looking at a retest of this purple line down between 1,500 and 2 grand, somewhere in that ballpark, okay? All right, so I said that I would go ahead and present the bullish case and I would tell you what would make me bullish. And I've talked about this in past videos, so it's really nothing new, but let's go ahead and cover it real quick because I do want to give both sides of the coin. So first things first, this is turned over and this has turned into a big M, which is very bearish, but there's still a possibility. I don't think it's a very good possibility, but there's still a possibility that we will flip bullish on this thing. And I want to show you this, but let me pull up a new chart to do it because a line chart is going to make it difficult. So I'm going to get rid of the RSI and I'm going to get rid of all these lines. I'll just keep the downtrend and we'll get everything else off of here so it's not too messy. All right, so we'll put a daily chart up here and we'll change this back to a candle chart. And essentially what we did was we popped up here, right, blah, blah, blah. We tested the top of the triangle. If we draw some Fibonacci levels on here, we'll draw them from the bottom of this weird pump, right, to the top. Our 61.8 fib is right around $8,535. So I'll just draw a line right there. Wouldn't quite test that yet, which is fine. But that also lines up with, look at this. It lines up quite nicely with this neckline over here. So far, this has tested this, which is, if we can get a bounce off of it, might be a good place to go long, at least on a smaller time frame. Okay, if you have this, and then A, B, C, if this bounces off this and it's able to go up here like this, then the key part to watch is this, right? What happens when it gets up to this line? Does it break above it and then dip back down, or does it break above it and punch in a new high? If it punches in a new high, then I'm going to lean bullish. That's as simple as it is. If that punches in a new high, then I'm going to lean bullish, okay? Doesn't mean I'll necessarily FOMO into a position at that point. What I would be waiting for is I'd be waiting for this to come back down and retest the top of this and then get in there. And the reason I'd want to get in there is because then I can set a stop loss right here. So if I'm wrong and it's a false break and it comes back down, I get stopped out. And if I'm right, it goes up and off to the races we go. That's what would turn me bullish. Okay, that's about the only thing that would turn me bullish. Getting back above this 200 MA is going to be the first thing that bulls have to accomplish. And right now that 200 MA is at $9,200, which means it's lined up quite nicely with the bottom of resistance here. Okay. So if it can break back above that, I'd probably look to go long on a smaller time frame and just see how it acted when it got to the top of the triangle, if it gets to the top of the triangle. All right. If we fail to hold this neckline, then I think it's a pretty quick drop down to fill in this liquidity gap right here. And then if this level of resistance, support fails to hold, I think it's going to be a fairly quick drop from there. We really, once we get below that level, support starts to disappear. Okay, if you look at this, so all through here, all through here, there actually was support. It didn't look like it because it wasn't any in the last couple months, but over here, that was a really strong area of support, right? Bam, 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 just really, really tough area to get through. But if you look after that, if we break below that, there's nothing, right? The next level that really holds any real significance is right here. That's down around 5,300 bucks, okay? And I don't think that's going to hold. If we get down to that level, why wouldn't we just go down here and fill in this liquidity gap, right? All the way down here, which is the level that I've been waiting for some time. And of course, then you have this level down here. I said I was going to be bullish. Sorry, I just went back into bear mode. It just, it's hard to be bullish, guys, because there is no bullish structure. There's nothing bullish about this chart. There's just not. When you look at RSI, we got up at here and we put in a higher high on RSI while putting in, a lower high on price. We had bearish divergence, right? Look at this. That's not good. And a downtrend, that's the last thing you want to see. But again, that's what would turn me bullish. If we do start to go south, it's possible that 6,000 becomes a really good line of support, and that, the 2018 support, which again was 6,000, is where we stop. But you have to remember that with support, it's the most recent support that holds the most weight. The longer and back it's been, the less important it is. Okay. So that's kind of the big picture on Bitcoin. Let's take a look at the small picture. Okay. So I've been showing you guys this hourly chart and this green line of resistance. Holy cow, this thing has paid me over and over. Look at this. It paid me again this morning. When I first got up, I went short right here and closed it on this red candle. It was just a quick scalp. We're getting ready to come up and touch it again. I want to tell you guys, no matter when you're watching this video, I don't know if it'll be broken yet or not. Be careful getting too confident in this line, because like any line, remember, the more times it's tested, the weaker it gets, and it's been tested a lot. So I would expect that at some point soon, this is probably going to break and price will head back up to retest, at the very least, the top of this channel. Okay. So I right now I guess you could say I'm semi-bullish on the tiny time frame, like on the hourly time frame. I don't want to go short right now. If we look over at this chart, it's a 5-minute chart. This was our old support, so it could be that we come up here and fail. That would be interesting to see. It also lines up with the smaller, Fibonacci level, the 61.8. So I'm saying I don't want to go short, but it depends, right? It does depend on how this looks when it gets up to this line, if it gets up to that line. I think it's more likely that this is probably going to be the Fibonacci levels that are in play, and that this 4-hour chart, this 4-hour line of resistance, is probably going to be the one I'm watching. At least on a swing trade. Day trades, again, I'll look at the 5-minute. But this could very well pump back up here to 91.48. Maybe hit this line around the same time. And that would make sense to me, because if you look, look at that. That's a pretty, strong line of resistance right there around 9,100 bucks. And again, all the way up to right in this area, which was right around 91.50. So I could definitely see this thing moving back up to that area to trap more bulls, or liquidate bears, right? It works both ways. If bears are going short down here and this thing pumps all the way up here, that's a pretty sizable pump. I think it's about 3% off the top of my head. Yeah, right around 3%. So a lot of bears would get stopped out, and you'll often see that. You'll see them move up before a market moves down, or if a market's going to move up, a lot of times it'll move down first to shake people out. So that's all that is this to me looked like a shakeout, and I do think it'll come back up and retest that resistance. And then if it gets through it, we could start talking about it possibly going up through this line here. But if it fails, then, again, I think we'd just be headed lower. Do one more thing. Weekly charts, guys, same deal. RSI, right, inside the zone. The week hasn't closed yet, so I'm not super interested in that. However, we did have a 3-day close. This candle closed last night about 9 hours ago. So this is now a confirmed double top on RSI, or otherwise known as an M. And that's exactly what I was suspecting was going to happen, right? We had these two confirmed M's back in 2018. On the first big rally, this rally was a 100% rally, way bigger than this 40% rally, right? We got the double top and then dumped hard. So we have our double top here. We didn't get a perfect double top on price like I was hoping for. I say hoping for because I wanted to be able to open a monster short, and I didn't get to do that on a swing. I've just been able to day trade it instead. But we do have this confirmed M. So I'm going to be watching that with some interest, because if this starts to move back up, that would be very different from what we got these last two M's, right? These did not move back up. You can see this kept going back down. And you might look at this and say, James, it's already going back up. That doesn't matter, right? It only matters after the candle closes, because if this starts to go back up and then dumps and closes down here on this chart, you'll never see that little leg up. It'll just flip back down and it'll be pointing down. So I was going to go off and take a look at alts today, but realistically the video is getting fairly long, so I think I'll just go ahead and wrap it up there, and I need to get back to bed anyway. But I hope you guys enjoyed this video. Please remember, I am literally some guy sitting in a spare bedroom, so nothing in this video is financial advice or trade advice. You should always do your own due diligence before making any type of investment in cryptocurrencies. If you enjoyed the video, be sure and give it a thumbs up, and don't forget to subscribe to the channel. Also, don't forget, you can check the description for links where you can follow me on TradingView, Twitter, join my free Facebook group, and also links where you can support the channel. This is James with Crypto Common Sense. Trade safe.